you know, where this is more like, you know, kind of like a 4-year vacation for you. All of us other guys gotta go to work, you know, after we graduate. So thinking about, you know, career and really gearing yourself towards the career, like right now, which some of you probably are already doing it. But if you can really focus on the career aspect and get a really good, solid momentum and trajectory, you know, in your junior, senior year, what are you? Juniors, seniors? Juniors? Any seniors? Seniors? Okay. Are you guys already working? Yeah. Yeah? Are you working in real estate? Oh, that's awesome. Perfect. Then we can, I'm usually teaching juniors across different disciplines, or maybe finance majors. So I only get a few real estate majors. Very rarely do I get a whole class of real estate majors. And I did at Cal State East Bay when I taught over there. I taught there for 4 years. They brought me back after like 12 years to try to revitalize their real estate program, but the competition with the tech side was so severe it kind of wiped out the program. And I've been through multiple cycles in my career, and I've seen real estate programs come and go. So they brought me here to work in this program and help revitalize it and help, you know, bring some expertise into the program. I'm not a you know, PhD, you know, trained real estate economist where I basically spent all my time going through academics and then going to a tier 1 research institution and then coming out and becoming a real estate professor. That wasn't my path. What I did was I always worked, I always went to school, basically. That was the thing. My first job was director of research for a company called Grubb & Ellis in Marin, right out of college. I'd been parking cars in a parking lot and working as a waiter in my family's restaurant for years and years. And then when I graduated, I knew I wanted to be a real estate economist, so I focused on it and I took the director of research position at Grubb & Ellis in Marin. And then I went, right when I graduated with the econ degree, I went right back and got the finance degree in business administration with concentrations in banking, accounting, finance, and real estate. So I, you know, got 4 concentrations. And then once I got that job, I moved over to run the research department for a company called Norris Bakes and Simpson in San Francisco to basically track the office market in downtown San Francisco. And I really loved going from Marin to San Francisco because San Francisco's office market is an international market. I mean, if I'm an international investor, I'm not only looking at buying office buildings in downtown San Francisco, I'm looking at Hong Kong, Singapore, Seoul, you know, maybe Moscow, you know, Berlin, London, you know, I'm looking Madrid, I'm looking all over the world. And there's really no difference between buying in San Francisco and buying someplace else if you're an international investor. So that was amazing doing that. And I worked with a mortgage group there, I worked with a consulting group, I ran the research department, and I worked for teams of brokers that specialized in office, industrial, and apartments. So that was a really good position. I did that for 3 years. And then I got laid off in the recession. A headhunter came to me and said, what do you want to do? She said, don't you want to be a property manager? I said, yeah, I want to be a property manager, obviously, because I was going broke. And I said, no, what I really want to do is I want to become an institutional real estate economist, work for a pension fund. I want to be a modern real estate portfolio manager. And I want to design real estate portfolio strategy, you know, for large institutional investors and apply the finance theory, the investments and the institutions and the corporate finance, but I want to apply it in real estate companies, particularly publicly traded companies, as opposed to private companies, and that's what I want to do. And she came back to me and she said, you know, there's a job over at a company called Mellon McMahon, which is a pension fund advisor. They basically manage a couple $2 billion in assets under management. They have a private REIT arm where they syndicate and issue private REIT securities backed by the portfolios of real estate. They also do funds, private equity funds, where they go out and they raise $250 million and they go out and buy a bunch of office buildings, and they manage them in the fund like a closed-end mutual fund. And they also manage single accounts. So if you're CalPERS or CalSTRS or Ohio or Michigan or some of these large pension funds, what they'll do is they'll design the portfolio strategy for you, and basically the plan sponsor gives us the $500 million, and we basically deploy the capital into the real estate based on the strategy that we designed and provided to them. Are you guys taking notes? Or do you have photographic memories where you remember everything I see? I would be taking notes, because you're not going to remember any of this stuff. That's why I record all my lectures, because there's no freaking way that you're going to remember everything I hear, that I talk about. There's just no way, unless you're brilliant. You know, photographic memory, brilliant. If you were brilliant, you'd be at MIT or Harvard, you know, or one of the top schools. Okay, I know you guys are smart, but again, you know, you need to take notes. Okay, and you're going to need the videotapes. Okay, you're going to need the videotapes. The reason why I'm going through my background is because if you can understand my trajectory and my background, and you understand this stuff, you will be able to use the same kind of language and logic when you're talking to other individuals within the industry. And when they hear that you have the command of the language, along with the logic and the analysis, you're gonna get the jobs, you're gonna get the internships, you're gonna move up. Because you're already thinking at a very advanced or high level. And it takes years to be able to develop the expertise and the content and the knowledge, and then to be able to communicate it like I'm communicating it right now with extreme precision. It just takes a lot of time, and you'll all get there at some point in time. So I worked for Mellon McMahon for 3 years, and then the company got bought by a company out of Sacramento. And the culture there was completely different than the culture that I was accustomed to there, and I really didn't see an opportunity for me, so I quit. And then the president of the company, who had left the company after the buyout, came back to me and said, hey, I'm working with a real estate investment trust. We're about $750 million in assets under management. We're publicly traded. We just engineered a mergers and acquisition between another publicly traded company out of Southern California. We need somebody to advise us on the research function within the company. So since you were in research, will you advise the acquisition and development team on what types of skill sets and what the job description would be for somebody for research within the company? I said I'd be more than happy to do that. So they came, they talked to me, I thought about it for a while, and I went back to them and I said, what you're going to need to do is to hire somebody who has both expertise in finance and in real estate. Because it's really hard to find the two. Usually people go into finance and people go into real estate, but they don't. It's two different cultures, they're different areas. So I said, you need to find somebody with expertise in both. And then what I would do is I would build a research department as opposed to putting the research department person underneath acquisitions and development or underneath asset management. I would create its own silo, its own vertical, and allow the research department to produce in-house views on where the economy and where the markets are going to go. Be able to use that information in investor relations and marketing and annual reports and portfolio strategy and asset management strategy. I was basically laying out to them a research position, a strategic research position within the company. So I wrote them a report, I gave it to them. A year later, they came back to me and they said, okay, we've been looking for a position exactly the way that you described. We couldn't find anybody. We were finding financial analysts, and then we were finding real estate analysts, but we found real estate analysts that didn't know anything about corporate finance. And we were finding corporate finance analysts that didn't know anything about real estate. Would you like to be the director of research? I said, yeah, under one condition. I don't want to report to somebody under acquisitions and development, and I don't want to report to anybody underneath asset management. What I want to do is I want to report directly to the president of the company and basically be beholden or have the fiduciary responsibility to the board of directors and the shareholders. And it took me a while to negotiate that, but I finally negotiated that position, built the first institutional grade strategic research department within a real estate investment trust in 1996. And I ran that for 7 years. And then after that, in 2003, I went in and got my insurance license, my Series 7, my 66, and went into the investment management business with a specialization in working directly on strategic financial plans for real estate principals, both at the corporate level and the individual level. So family offices and stuff like that. Because I already knew the real estate, but I didn't understand the tax and the trust side of the business, and I didn't understand insurance and security products to be able to fill out that portfolio. So I did that for a while, and then went into business with my dad on the brokerage side, and started brokering commercial real estate assets. And actually, I had a dual business strategy. I had a commercial brokerage arm over here that was doing leasing and sales with the 1031 exchange. Is everybody familiar with the 1031 exchange? No? Okay, I'll go through that. It's the one of the most powerful exchange techniques used. It's written under the IRS code 1031. You'll probably learn about it in your tax classes. So I had a real estate component arm where I was the broker, and then I was hiring agents to work underneath me. And then I worked with an investment advisory investment management company. And those guys also knew a lot of real estate and techniques on how to take money out of real estate and put it into other, insurance and investment products to be able to diversify, but also hedge off a lot of the market risk. So I did that. My dad passed away, so that blew it. And then one of the tax structures that were extremely powerful, and we were shoveling, millions of dollars out of real estate into what was called at the time a private annuity trust. That was taken off the table in 2006 by the IRS, so that vehicle and strategy was eliminated. So then I went back into the marketplace and met up with some friends of mine that were running a real estate investment advisory company. They had done commercial mortgage-backed securities, structured products, derivative contracts, using the commercial mortgage-backed securities as the underlying assets within the structure, and then sold that to some institutional investors. They also had an international real estate investment trust, securities, portfolio, and securities research arm. And since I had a background in REITs, I was able to advise them on the international REIT securities valuation and portfolio management piece. But what they brought me in to do was to work with their index services division. They had an arm of the company, the research arm, where they collected massive amounts of data and basically constructed indexes around the real estate markets. So they were tracking capitalization rates and sales and rent per sales prices per square foot, rent per square foot. Am I talking a foreign language here, or do you guys understand what I'm saying? Some of it? Yeah, you'll get it. Tonight's the first night, right? So they had this huge database of historical data, and I actually used the historical data for my own doctoral dissertation, because I eventually, all the time that I was working, I did the bachelor's degree in econ, and then I did the business degree with 4 concentrations, and then I went on and did a master's degree in applied economics, a master's in investments finance, a master's in public administration, housing policy, a master's degree in political science, housing policy and economics, and then I did a master's in information systems with a focus on real estate tech applications, both internal to the company, and now I'm working on some fintech products in real estate, working with an IT team developing another real estate capital markets product, which will be institutional. Our goal is to have a couple billion under management by not this summer, but the following summer. So they hired me to work with, anybody ever hear of Standard & Poor's? The S&P 500 index? Dow Jones Industrial? Yeah. S&P 500? Yeah. S&P 500 built the stock market index. There was the Dow, which is the Dow 30, and then the S&P 500 were the top 500 companies being traded on the New York Stock Exchange. You have to qualify to get on the New York Stock Exchange, and you got to qualify to get in the S&P 500 as the one of the top 500 companies. So the company that I was working for had a relationship with the Standard & Poor's, and their index only goes back 140 something years. So basically they came to us and said, well, we had just cut a deal with these guys, Chip Case and Bob Shiller. Bob Shiller just won the Nobel Prize about 2-3 years ago in his work in PE multiples around the stock market, but he has a whole extensive research on real estate economics. So they said, what we would like you to do with the team is to basically build the S&P 500 index for commercial real estate prices. So indexes that would track the prices of real estate. Oh, and by the way, what we want you to do is once you've built the indexes with your team, what we want you to do is work with the Chicago Mercantile Exchange. Anybody familiar with the Chicago Mercantile Exchange? It's the largest derivative trading platform globally, next to NYMEX, out of New York. It's where they trade all these derivative contracts and stuff. So what we were doing was building the indexes to track real estate prices. And then the Chicago Mercantile Exchange and the investment banks, we're basically going to write and buy. You need to follow along with this because I'm basically laying out your future for you if you believe in this stuff. Some people think it's just stupid. What they did was once we built the indexes, the investment banks would write and buy the over-the-counter property derivative contracts, and the Chicago Mercantile Exchange would make available futures and option contracts based on those indexes. So if I thought that the real estate market prices were going to go down, I could be writing these forward and futures contracts, and buying these puts on the futures, writing calls on the futures, and basically hedging off my real estate market risk, preserving the expected return and the value of my portfolio. Pretty neat, huh? Yeah, because everybody can do it. Everybody's been able to do that for about 40 years in fixed income and stocks, but they were never able to hedge off market risk in the real estate market. So it's pretty revolutionary. And then, so they hired me to do that. I had like one guy that was like 70 and an intern that was working with me, and I had a programmer and a couple of analysts. And then our company got bought by Schwab. And once we got bought by Schwab, they gave me the resources, and we were able to finish the indexes in 6 months. So it started at the end of 2006, and then 2007 we finished the indexes, and we started the global marketing campaign to not only launch the indexes as the standard, but also to launch the indexes as a way for investors to basically invest in real estate without actually owning the real estate. So they could take a view and use the derivatives. It's like they do in stocks and fixed income. And then by 2008, does anybody remember what happened in 2008? Yeah, totally. So, asset values were dropping 40, 50%. Some, low grade real estate mortgage-backed securities that were rated AAA were junk. It was just a horrible time period. And by 2009, I had to fire my staff. And then I got the severance check, and they said, get out, basically. So then 5 years I ran, I did investment management for a couple investment advisors, because that was the only thing you could do. All the other jobs were in New York or Chicago. There was nothing in San Francisco, what I had been used to doing. And then in 2010, I started getting the calls. Actually, right around 13, I started getting calls on doing advisory work on predictive analytics using big data applications to try to predict where the direction of residential and commercial real estate we're going to go. So working in the real estate fintech space, and which is where you need to be thinking. If you can couple your degrees with some, programming in R or Python or some advanced Excel, your resumes will go to the top. Okay. So then I waited 5 years. Okay, until do you know what happens after 5 years? You know, I have like all these contracts and stuff sitting over here in a box. What?
They run out?
Statute of limitations. So any claims on those intellectual property then become mine. So I waited 5 years and then basically took all of the information, a lot of the reports that I wrote, refashioned them and rolled them up into my doctoral dissertation, the last 5 chapters, and then published the dissertation in April of 2014 and finished the doctorate degree after 14 years. And then went academics full-time over the last 5 years, and I've been consulting 3 startup companies recently. One in energy, and one in real estate fintech, and one in real estate index portfolio construction. We're gonna basically do what we did before, but we're not gonna use property derivatives. We're gonna use other real estate securities to basically build the same type of institutional product. Okay. Any questions? Is that interesting or just boring or just whatever your head? Yeah, kind of interesting.
Super.
Yeah, you know, not bad for a kid who was washing dishes in high school and got really bad grades because I didn't think I was very smart. I realized that my parents just needed help in the back. And then, you know, when they closed down the restaurant, I didn't have any opportunity, so I went and worked for a Greek family in San Francisco called the Leonidakis family. That basically, when I was your age, I was running 5 parking lots in San Francisco. Not only Candlestick with the Giants and with the 49ers, but I was running, you know, 5 other parking lots, nightclub parking lots, stuff like that. So I was running pretty much my own business on their platform. I did that until I could get my first degree 7 years later. It took me like 7 years to get my first degree. And I figured, you know, education is really the key to success. So I put together a plan of what disciplines I wanted to become an expert in academically. And I basically went to school and worked full-time the whole time. So I never really stopped. Oh, and then my professors at San Francisco State came back to me and said, hey, you're a real estate expert. Why don't you run the real estate program at San Francisco State at 32? Yeah. So I taught 2 classes, a principles class and an investments class. And then I did a year-long course where I trained my students in affordable housing development. So we worked with Bridge and some pretty major affordable housing developers in San Francisco underwriting some of their deals.
How old were you when you got your first degree?
29.
Damn.
Yeah, I was, yeah, well, I didn't know, you know. I mean, my dad never told me anything. He was, you know, it's all he did was pretty much party. Never really encouraged me to go to college or anything like that. Until I was, you know, became more successful, and then he was like, oh yeah, can you need any help? It's like, no, but thanks. You know, cool. But we ended up reconciling, and I ended up working with him for a little bit. So this is the research program that I wrote for BRE Properties. So it's basically a research strategic plan. And what they wanted is they wanted somebody who could not only build the plan, they wanted an institutional grade strategic research vertical within their company because they wanted to raise billions of dollars. Nobody's going to give you billions of dollars if you're just going to buy real estate anywhere. You got to have a research strategy. It's got to be research-driven focus. Okay? And the chairman of the board, who I worked with, Melvin McMahon, he became the chairman of the board and brought me in to build the vertical. So I reported to him and the president of the company. And then I worked cross-functionally across the organization in capital markets and accounting, IT. I had my own research department. I worked for acquisitions and development. I got to work for all the functions within the company. And the whole time I was trying to automate stuff. You know, see if I can automate the valuation process. You know, automate the portfolio construction process. So if you're really into real estate and you want a career in it, you should read this stuff. Okay? You should really read it. Okay? So this was the strategic plan. Okay? And that actually did me very well. Because since these are publicly traded companies, when you go work for them, they give you stock grants and stock options. Okay. Does that sound familiar? Stock grants, stock options, anybody?
Stock options.
Yeah, so if I'm a publicly traded company and you come work for me and they say, hey, do you want stock grants and stock options? What are you gonna say?
Yeah.
Heck yeah, you want those stock options, stock grants, because if you help the company become more valuable and the share price goes up, you're gonna be in the money on those stock grants and those stock options, and at some point you're gonna exercise those options. Unfortunately, you have to pay tax on those options when you liquidate them, but before you know it, you might have $500,000 worth of, net of tax money to go buy your house in Nevada.
Do they put the price on how much your option is? Like,
They'll give you, what happens is they'll give you a certain allocation of options, certain number of shares, and as you work for the company, you start to vest.
okay.
Okay, so 1 year they'll give you, a bunch of shares, okay? And then the next year you will vest in a small portion of those shares, and then they'll give you more shares. And then the next year you'll get some more shares, and those two will vest. So over,
So it's like the longer you put your time in, the more.
yeah, totally. And it's awesome. I mean, I made some pretty good money.
Is it different than like if you were just to buy your own like options like just?
These they give you, they're granted to you.
Oh, okay.
Okay, and you don't pay any taxes or anything on them until you exercise the options. And you don't exercise them until you're in the money. So the options will have an exercise price.
Yeah.
And let's say the stock price is $150, and you got them for 100, so you can buy them at 100 and sell them for 150.
Yeah.
So you're gonna make that $50. Am I talking too fast? Do I talk too fast? I talk really fast.
I might stop you for a definition.
Yeah, please. And what'll happen is that usually the first night's really overwhelming, but if you stick to the program, by the end of the class, you'll learn more in this class than you'll probably learn in a lot of other classes. Yeah. Because if you look at the book is nice, okay? And what I would do is probably share the book. If you
I read about it.
read it or something, but that book doesn't teach you how to manage real estate. Right? It's an urban economics book. It was written by a bunch of PhD economists, right, at a university. How many PhD economists actually ran a multi-billion-dollar platform or built a multi-billion-dollar research platform? There's not a lot of them. I know a lot of them. There's not a lot of them. So you either go PhD university track, or you go university track and then over to private sector. Or you go get your PhD and over to Prudential or USAA or REEF or Deutsche, Goldman, JP Morgan, wherever you want to go. And they love it when you have PhD, master's degrees and stuff like that. And the better your grades and the better the school you can go to, that's even better. Okay. But I'll give you some other strategies on how to excel. Okay. You guys on the accounting side are awesome. You guys will never be unemployed. And most of you at some point will become CFOs, and maybe even CEOs of companies if you stick to the program. Okay. So this is the article with Dr. David Blitzer. I know it was a while ago, but I'm pretty proud of building these indexes. Dr. David Blitzer basically oversees the S&P 500. S&P 500 basically manufactures, on behalf of financial institutions and other companies, thousands and thousands of indexes. And he was the man, okay? He's the PhD economist at S&P that runs the index services division. Okay? And there's little old Larry right there, right next to him, right? One of the smartest guys ever. He and I were able to work. And then actually this content you see here, I wrote all this stuff, they blessed it, we published it, and then I took it, right? Took it after 5 years and put it in my doctoral dissertation. Yeah, well, I had to. I had to wait 5 years, and then I had to go back to them and say, hey, I'm gonna use this content in my dissertation because I wrote it, but you guys published it, and if somebody says that I plagiarized S&P, I wanna make sure that I have the email that says, yes, the legal department has already looked at your content within your dissertation, and you have the right to publish it. So therefore, it's not plagiarism.
So then it was like, by that time, this work you'd already done.
It's the work I did, so I waited 5 years so that the statute of limitations would be over. So I would have right to the intellectual property. And then I went back to Schwab, back to the Chicago Mercantile Exchange, and back to S&P to basically get written authorization and approval to allow me to use the content that I wrote underneath their brand so that I wouldn't get accused of plagiarism and lose my dissertation, lose my doctoral degree.
Oh, that's so
Because plagiarism is a big deal. A lot of students and other academicians will plagiarize other people's work. Once you're found out that you plagiarized, that your career's over. Okay. So you gotta be like I was like dotting the I's and crossing the T's, just really making sure I didn't screw it up. Okay. Because the intellectual property I knew was so valuable that I would be able to use it again at some point in time in some other type of product development, and I didn't want, those companies to have a hold on my intellectual property. Okay. So this is the indexes, and I'll go through it. This is all applied real estate economics. This is all applied real estate financial economics, is what it is. So we could go through and spend the whole semester going through urban economics, or we can spend most of our time doing applications in real estate financial economics, the econometrics and stuff that I've done to totally train you on how to do the stuff that I did, as opposed to taking multiple choice exams from the book. You want to do multiple choice exams from the book? Okay, perfect. Because I'm really convinced that the academy doesn't do a very good job of training you for the real world. If they're giving you multiple choice exams and testing you intermittently throughout the semester, and then basically rewarding you or penalizing you based on the amount of content that you remember. No, it's what you produce. Can you write? Can you analyze? Can you do memos? Can you do reports? Can you get up and present in front of other people and communicate very complex concepts and allow them to be able to understand? If you can do that process over and over again, you're going to be extremely successful, because that's all we do as managing directors and executives. We talk strategy, tactics, how are we going to operationalize the tactics to reach the strategic goal, how do we come up with the plan or the product or the process, what's the team look like that we need to put together, and then we need to go out and get a budget, right, to raise some money that we need to be able to hire the programmers, the data scientists to basically do the implementation, and then test it, see if it works, and if it works, based on the back test, and it looks good, we can go out and pre-market and start raising the money and start pushing out the product in its beta state to get some early indications of demand. Okay, because nobody's going to spend money on anything if they're not going to make money. We're not in the public sector. Okay, and you even got to make money in the public sector. Okay, any questions so far? Just kind of, and then what I would do is bring all this stuff to class. Okay, bring all this stuff to class. Okay, get a binder, put it in a binder, bring it to class. Take lots of notes. Okay, and if you do, you can't make it to class, just text me, say, Professor Souza, my grandma's sick, I gotta go to, Detroit, I'm not gonna be able to make it. I'll get the notes, from my colleagues, and I'll watch the videos. Okay, that's why I videotape all my classes. And I can't believe more professors don't. Most professors are not going to videotape the classes. Okay. Too much liability, and they don't want to be, you know what I mean. But I do, because I think a lot of the stuff that I go over is really complex, and you're not going to get it the first time, but you'll get it the second time around. And then what you're going to do is you're going to use the videos to study for the exams, because I'm going to go over all the exams in class. So the videos become basically a training video. And then when you come in and you take the exam, if you didn't do well on the exam, you go back and review the videos, you correct your exam, you give it back to me, I check it out again, and then if you still after the second time are having some deficiencies or there's some gaps within your analysis, I'll sit down with you on a one-on-one basis and I'll show you exactly where the attention to detail should be put. Okay. So the way I set up my classes is I don't give anything less than an A in my classes, but that doesn't mean it's going to be an easy class. I drive you to an A, okay? because I think that if any professor ever gave an F and a D, it's probably their responsibility for giving the F and the D, and they weren't really looking after the student's best interest and trying to create some kind of intervention to try to bring that student along, or figure out if it's, you know, mental or physical or maybe traumatic. You know, there's some kind of issue there's an issue. It's really up to the professor to take on that responsibility to intervene, you know, to make sure that all the students are succeed. C students are A students, they just gotta put in more time. B students are A students, they just gotta put in more time. A students are always gonna be A students, right? Because they're that good. A students love my class, and so do the others, because even though it's a lot of work, so it's perseverance and persistence, so it's production oriented as opposed to intermittent assessments, right? So the brilliant people, I love these guys, they're really brilliant, because they have photographic memories, they can remember everything, they can ace all of the exams, multiple choice is easy for them, all that stuff's easy for them. So when they get me,
They can think.
if they don't, that stuff's easy for them. Working hard is hard for them because it's easy for them. So when they get me and they have to start working hard, they get really mad. But the really good A students totally see it, and I'll show you some examples of some of the products that my students produced last semester here at Menlo. This is my first time here last semester with, I think, some success. I mean, every school is a little bit different. The students are a little bit different. The demographics are different. This is great because there's only 10 people in the class. That's the perfect size for a class. Perfect size. I taught classes up to 50 people. 30 is okay, 22 is even better. But 10 people in class is awesome. Okay, so this is your statistical pretest. Did you guys look at your prereqs?
Yeah.
Yeah. Do you understand the prereqs
Yeah.
for this? Calculus, intermediate algebra, statistics,
It's a nice one.
right? No, so you guys are coming in with all, theoretically, already a solid foundation in data analytics, in data analysis, and comfortable with the mathematics. Some of my students say, Professor Susan, I'm not really good at mathematics. It's like, that's baloney. Everybody's really good at mathematics. You just been conditioned to think that you weren't good at mathematics. Everybody's good at mathematics. So you just, you confront it, you become good at it. I mean, that's what everybody does. That's what all the top people do at the top schools and the top companies. If they weren't good at mathematics, they became good at mathematics. If they weren't good at writing, they became good. If they weren't good at presenting and speaking in public, they became good. So it has nothing to do with, you know, it's not a genetic predisposition, it's just, are you willing to confront your fears and your weaknesses and overcome them? And actually it's excel at it. Okay, so this is the statistical pretest. I'll go back to the syllabus in a second. So why would I give you a statistical pretest?
To assess where we are right now.
No, why would I give you a statistical pretest? My old professor, Betty Bleck at San Francisco State University, God bless her soul, she taught econometrics over there. She was awesome, amazing professor. She would give you a statistical pretest before every single class. Okay. So why would I give you a statistical pretest?
Probably to see what we don't know.
Yeah, to see what you don't know, see what you do know, and then actually create knowledge for you too. So it's actually a training, a vehicle too. And it's in a no stress environment. I'm a big believer in take-home exams and, providing you with the content so that you learn it, and no Mickey Mouse tricks or anything like that on the exams. I don't care about that stuff. I just want you to learn the material. Okay. So whatever it takes to learn the material. So the statistical pretest is really important because you're going to be working with lots of data. And if you have standardized data, like percentages and stuff like that, and you go from 2 data points to 20 data points, 200 to 2,000 to 20,000, what happens to the distribution? What happens to the distribution? The distribution of the data. What happens to it? it becomes, if I do a histogram,
More accurate.
yes, but what does the distribution look like?
Like a bell curve.
Statistic, what?
Like a bell,
Uh,
a bell.
yeah, it's normal, okay? And if your data distributions are normal, what can you do? And if the distributions are nice and tight around the mean, what does that tell you? Now, this is the key point here. If you have lots of data, or you can manufacture data that has tight distributions around the mean, what does that tell you that you can do with the data?
Trust it.
Yeah, but what else, more importantly in business, what
Use
can I
it,
do with the data?
use it as research for your ideas.
Use it as research to be able to do what?
Make money.
Yeah, but how do you make money?
Predict.
Exactly.
What was it?
So if you can predict the future, can you make money?
Yeah.
Totally. As statistics and data analytics now become totally verified and validated as a means for prediction with accuracy, if I can predict where the real estate market's gonna go, can I make money?
Yeah.
Yep. If I know where the stock market and the bond market's gonna go, can I make money?
Yeah.
Totally. So it's not really as hard as you think. Everybody thinks it's really hard. It's not really that hard. It's like, do you understand how to create data, to basically, and know how to fix the data, to get it to be normal, so you can get tight distributions around the mean, or to be able to filter the data, to make the data so that the mean and the variance of the data set allows you to predict and build models so that you can actually predict where the future is gonna go. That's what they're gonna be asking you to do, accounting majors. They're gonna be asking you to predict stuff, right? You're all gonna be asked to predict stuff. You want to be able to be asked to predict stuff. Because wouldn't it be awesome if somebody comes to you and says, hey, Larry, I'm thinking about buying a house, where should I buy? I'm thinking about buying a $20 million commercial real estate, industrial building, where should I be putting my building? Oh, and by the way, will you do the research, and do you know how to broker that? Could you represent us on the selling side of the transaction? Yeah. So you do the research and you're part of the brokerage.
Would you ever be an actuary or?
Um,
I feel like.
No, but I'm kind of doing that too
Yeah. I was gonna
already.
say.
But I'd rather do it on the security side as opposed to the insurance side, although I did sell insurance for years. Okay. But the skill sets
Yeah.
that you learn as an actuarial are, you become a statistical expert. Okay. Distributions. Are data distributions different, or are they always normal? Could you get a skewed distribution, an exponential, binomial, Poisson? Could you get different distributions? Yeah, if you know if you know the distribution of the data, can you correct it through statistical transformations, applications, and statistical transformations? Can you get a skewed distribution to become normal? Yeah, you can do that. And can you apply other types of statistical techniques based on the data distribution to allow you to be able to analyze the data to predict? Yeah, I'm telling you all the answers. I'm not even trying to test you. I'm telling you the answers. And then the mean, median, mode, what does that test? What does that give you? What does it measure? Huh?
Most common thing.
It's basically what they do is they measure central tendency within the data. And now with big data analytics, the mode is even more valuable now than it was before. In real estate, we always have data limitation issues. Like I'm working on a product right now. It took us 15 weeks. Took us like 2 months just to download the data sets. Two months to download the data sets. And then it took like another 6 weeks to basically fill in the data holes within the database, within the data, because the data had errors in it and the data had holes in it. So the CTO, Chief Technology Officer, had to come up with some statistical techniques to basically fill in the data so we had a full data set. We're still dealing with data issues constantly. And then skewness, kurtosis, leptokurtic. I'll talk a little bit about that, but you guys gotta go out and like find it and write it out. So you go find it, you do the research. I don't care if you work in teams. I actually encourage you to work in teams. You should be breaking up into teams of 3 tonight. Right, because you're gonna be working in teams throughout the class. You need to be working in teams. Are you gonna be working in teams when you go work, or are you working on your own?
No.
Teams, totally. You can work by yourself, but then you gotta work in teams, and you gotta be able to work with managing directors like myself, okay? Then histograms, stem, leaf, and box plots, those are just data visualization techniques, you know. And then you have variance, standard deviation, and confidence intervals. When you hear the word variance and standard deviation, what's the first thing that you pop in your head? If something varies a lot, if there's a large variance or a large standard deviation, what does that tell you about the data distribution? Or the data? If you have a high standard deviation or high variance, what does that tell you about the data? If I'm looking at stock market returns, and I have a standard deviation of 40%, and the other has a standard deviation of 20%, and they're both gonna give me a 20% rate of return, which one am I gonna buy?
20.
Yeah, 20 and 20, because I'm getting 1 unit of return per unit of risk. So the standard deviation basically measures, and you need to burn this into your brain, it's a volatility, and more volatility means more risk. So where would you rather buy? Where would you rather buy your building? Where would you rather own? Would you rather own in Albuquerque, Tucson, Phoenix, and Las Vegas, or San Diego, LA, and Orange County? Yeah, because which one's more volatile? The commodity markets, because there's a lot of land there and it's boom bust. Okay, so I'll go through supply constrained markets, commodity markets. I'll take you through all the applied economics and all that stuff. Or just getting your whistle wet. Confidence levels. Anybody know what the confidence levels are? Can you look that stuff up?
Yeah.
Yeah, I mean, you guys are what generation are you? Z, millennial, something like that, you know, right? We're all born with, computers in our hands and, cell phones and stuff like that. I mean, we could look stuff up like that. In the 80s and 90s, it could take me a week to get stuff. Now it only takes me a week to basically get stuff. You're the most powerful generation on earth because you have access to supercomputers in the palm of your hands. Pretty amazing. You can actually even run quadratic optimizations, Markowitz optimizations, on your cell phone. Couldn't do that 30, 40 years ago because it was so data, the data processing and the storage that was necessary to run it was too intense. The Z, T, and F statistics. When you're building a forecast model, what's the technique you're going to use? 9 times out of 10. What? What type of statistical technique are you going to use? If I want to build a forecast model, what model do I use?
Just use a point graph.
Statistics,
Points.
your statistics
Okay.
class, your statistics class. You want to write this
Sky
down.
point.
You're using multiple regression. Did you guys get any exposure to regression? Regression,
Oh, yeah.
multiple regression. Yes or no?
Yes.
Yes and no, okay. So we're gonna have to review that because you're probably gonna need, if I'm gonna predict where the prices of real estate are gonna go, or rents of real estate, or occupancy rates, or absorption, I'm gonna build a regression model. Okay, how do you build it? Okay, so I'll walk you through the model building. But you're gonna need to use the T and the F statistic. The T is for the individual variables to test for statistical significance and its predictive capabilities. And then the F statistics for the model. All this stuff's in your econometrics or in your multiple regression or linear regression books. Coefficient of variation, it's the standard deviation divided by the expected return. Oh, I'm actually giving you a lot of the answers now. And then the inverse is the risk-adjusted rate of return, which is the expected return divided by the standard deviation. And I'll walk you through all this stuff, but you should, go find that stuff, all right? Because you guys can look up anything, all right? And then what I do is over the next, few weeks before it's due, I'll come around, I'll check and see how you're doing to make sure you're doing it.
When do you post the video?
I'll try to get it up as soon as possible.
Sure, fantastic, thank you.
Yeah, you know, usually when the semester starts, I gotta download like 9 courses, so I do it at the end of every week, like on a Friday. So I'll download it, upload it. Do you guys have any problems with me making it public on YouTube? Do you guys have any privacy issues or anything like that? Okay. I have some students that just don't.
I'll give you a like.
Huh?
I'll give you a like. To the subscribe.
I need as many as I can get.
I'll share it.
I have a few enemies out there. So the covariance, okay, I got 2 stocks or 2 properties or 2 real estate portfolios. The returns are covariant, they move together. The volatility moves together. If the volatility moves together, am I getting diversification? If I add 2 properties into my portfolio and the risk is basically the volatility and the returns, they covary together, they move together, am I getting diversification? Don't I want them to have low covariance? Yes. If I get low covariance between the returns, I get diversification. Okay, correlation. Okay, correlation, do the returns move together? Right. Does anybody know what the range of correlation is? From what to what? Anybody remember what it was? I mean, the correlation coefficient is basically the covariance divided by the standard deviation. So what it does is it normalizes it and creates a metric between plus 100 and negative 100. Okay? So if the correlation coefficient is 100%, do the returns move together or move in opposite directions? If the correlation is 100%, or 0.96, or 0.76. If it's 0.76 plus, is it positive or negatively correlated? Positively. So do the returns move together or opposite each other? Together. And what about if the correlation coefficient was negative 0.76? They move in opposite direction, exactly. And if I get, if I'm putting properties in a portfolio whose returns have low, no, or negative correlation with the other properties in the portfolio, am I getting diversification?
Yes.
Yeah. And do you think institutional investors want diversification within their portfolio? Yeah, because they're risk averse. Okay.
Because it'll cover most of their.
Well, what they want,
Sides.
what institutional investors want is they want basically a 10% rate of return. And you know, have you heard of the rule of 72?
Yes.
Yeah. So 72 divided by 10 is what? 7.2. So that basically means if I can get a 10% rate of return, I can double my money in 7.2 years. Would institutional investors that are investing for 40, 50, 60 years be attracted to something like that?
Yes.
Yeah. Do they want 40, 50%, or will they take their 10%? 10. Yeah. Anywhere between 8 and 10. You can double your money in less than 10 years. So you, all of you that have 40 years of basically working, if you can invest, if you can get 8 to 10% rate of return on your money and invest $1,000 a month for the next 40 years, you'll be a multimillionaire. If you don't, you won't. Okay.
It gives me 7.2%.
$1,000 a month, 8 to 10% rate of return on an annual basis. You'll have $3 to $4 million in your retirement account. If you don't, you won't. If you do, you will. Okay, it's pretty simple. Okay, so do it. Okay, do it. Portfolio standard deviation, you're gonna have to look that up in the finance literature. But that's the way we talk. Okay, what's happened is real estate and finance have converged. Okay, they slammed together in the late 90s, and they're even more integrated now than ever before. The Wall Street guys have gone into real estate, and the real estate guys have taken money from Wall Street. Okay, I know a lot of high-powered women in real estate, okay, that were investment bankers. So they went Wall Street, and then they went over to the real estate side. Or they went onto the real estate side, and they got their MBA at Stanford and went over to Wall Street. So you can do it, okay, if you have the grades and understand what I'm trying to do in this class. Let's see, what is the value of using regression techniques? And I'll show you the regression model and how it looks, and then you're gonna burn it into your brain, okay? we're not gonna run regression in the class, but I want you to know how to build models and what to look for, okay? And you can do that in some of your other classes. You'll definitely do it in grad school, okay? Definitely the accounting and the finance. In grad schools, you'd be using regression a lot. Cross-sectional regression and time series regression. If I have enough historical data, I can use time series regression analysis. If I don't have a lot of historical data, I gotta use panel data across a bunch of companies in a shorter time frame because my company has only been around 2 years. I don't have enough data. So what I'll do is I'll find other companies within my sector, similar company that have been around, very similar. I'll be able to run the regression and come up with the coefficients and do the predictions based on a large sample of companies like ours, as opposed to my company's data over time. So there's cross-sectional and time series regression. This is all, you can get this stuff off the internet and stuff like that. Dependent, independent variables, which you're trying to forecast. Okay, so if I can forecast absorption, okay, net absorption, which is the metric of absorbing space in the real estate space markets. If I can forecast absorption, I can forecast occupancy rates. And if I can forecast occupancy rates, I can forecast rental rates. And if I can forecast rental rates, I can forecast valuations and prices. Okay. It's causation, okay, not correlation, it's causation. So if you know the logical steps, you can build the models to basically be able to figure it out. Okay. How do you test for the variables? I'll go through it. Multicollinearity, that's the problems. I'm building a model, I got 5 variables in the model. My adjusted R-squares are really high. My F statistics really good. It's like, woo, this model's working. Well, I found out that 2 of the variables in the model are highly correlated to each other, and to the dependent variable, I only need 1. Okay, I don't need 2. So I gotta figure out which one I'm gonna throw out, which one I'm gonna keep. And you end up keeping the one, I'm telling you the answer right now. You keep the one that's been cited the most in the literature, in the peer-reviewed journal articles. Okay, and I'm gonna have you do that. You're gonna write a paper in here. So if you already know what subject area or what area of research you wanna focus on, awesome, tell me as soon as possible, because you're gonna do a paper. Okay, and then you're gonna write that paper, I'm gonna edit it, and then you're gonna be able to use that paper along with the memos that you're gonna do in the class and the PowerPoint presentation. You're gonna use that as basically a portfolio of work that you can show potential employers for internships and jobs. Okay. Test question. Do multiple choice exams, are they used in the real world?
No.
No. Okay. Will you ever be given a multiple choice exam at a job? So why do they have it? Why do you use it? Why do they test you? It's like, it's ridiculous. So you need to build product, okay? You gotta know how to write, you gotta present, you gotta do the analysis, you gotta know where to do the research, and then you write it up and present it. That becomes your portfolio of products that you can start showing potential employers for internships and jobs. Do you want internships and jobs? Yes?
Yes.
Yeah, because unless you're rich, and you don't have to work the rest of your life, you're gonna have to work. The only way you can work is to stay employed. The only way to stay employed is you gotta be able to write and research and present and, be valuable. And be able to tell people how valuable you are and show them. Yeah, you had a question?
What was the thing you just said about the 2 points and they're 2 highly correlated?
Yeah, you have 2 variables. I got a model. I'm trying to forecast net absorption. And I got 2 variables in the model. Let's say I'm trying to forecast net absorption for apartment buildings, for the apartment market. Okay. And I got employment growth and I got population growth. Okay. Now population growth and employment growth are both highly correlated to each other and highly correlated with the dependent variable, but I don't need both of them. So which one would you keep and which one would you throw out? The population or the employment?
Employment.
Which one, keep or throw out?
Keep.
You keep the employment, exactly, because the employment,
Let's talk about
it has a higher statistical significance in predicting not only net absorption, but rents and valuations. Net absorption, occupancy, rents, and valuations.
Is it because the points influence the variable? Is that why? Or
Well, the
They
employment.
include something, so it'd be over.
As people get more jobs, right, they make more money, they rent more apartments, right? If they rent more apartments, absorption goes up. If absorption goes up, occupancy goes up, rents go up. If rents go up, then values go up.
You have crystal ball.
It's a crystal ball. Yeah. And if you can predict the future, you'll be extremely valuable. There's two types of risk: unsystematic and systematic risk. Can I buy buildings in different locations, let's say across the country, in different areas where the economies are different? Yeah. And would I get diversification doing that? Yeah, exactly. So that's unsystematic risk. Okay. Can I diversify away a financial crisis? If we go into a severe recession, can I diversify away from that? Or do I go with the economy? Are you going with it, or are you going against it? Can I diversify off my economic risk? Can I diversify the Federal Reserve's monetary policy decisions? Can I diversify away basically tax legislation? Can I diversify away party politics and political outcomes? No, those are all systematic risks. Okay. Okay, and then here, what I need you to do is go find a REIT, real estate investment trust. Now, what I would do is I would do the one right down the street. I would do Essex Property Trust. I think they're only like 16 billion or something like that, something ridiculous. And I would do Prologis. They're only like 18 billion, something ridiculous like that. Yeah, Prologis is in San Francisco, Essex is down the street. Do you want to go work for Essex?
Sure.
Do you guys want to go work for Essex? Publicly traded REIT, $16 billion in market cap. You know, you get paid like 140, 160,000 bucks a year. You know, mid-level career. You get stock options, grants, maybe tuition reimbursement. Your CPA exams all paid for. CFA. Would you go work for those guys? No, I wouldn't go work for those guys. Yeah. Go find a corporate income statement for an apartment REIT. Go do Essex. I want you to see what the balance sheet and the cash flow statements are. Because they're slightly different than tech companies and other types of C corps. REITs are special entities that were basically established by Congress in 1960 under the 1960s Real Estate Investment Trust Act. So they're different types of entities. Okay, and I'll talk about the structures a little bit later. But I want you to go, you accounting guys, you're foaming from the mouth over here. To go to Essex, go get their annual report or their 10K or something like that, and put the data in here. So I'm trying to get you to start thinking about financial statements. Can I value a company's stock by looking at their historical 10Ks and their annual reports and their press releases and listening to their analyst conference calls? Yeah, I can value the companies.
Wait, how would you listen to those?
You can go up to their websites, like if you go to Essex,
What?
Property Test, there's like an investor relations tab, and in there they have basically the list of the quarterly conference calls that they give to the financial analysts and the investors. Yeah, and they all talk real estate and they all talk finance.
What was the tab called again?
It should be investor relations or financials. And if you got your computers, I would just say click, 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 click. I would be bookmarking all this stuff. Because we're going to value a REIT in this class.
Have you heard of PCCP or Online Real Estate?
Are they publicly traded? Is it a residential?
They do they own commercial.
Oh, it might be a private equity company. It could be private equity.
Okay, so that's different than the.
Yeah, these are publicly traded. So the real estate investment trusts actually, their shares trade on the New York Stock Exchange. So they're public companies. And then these other companies, they're private equity real estate companies.
Yeah.
So they raise money to invest in projects individually or invest in projects in properties in a fund or in a single account. And I'll talk about, institutional investment structures so that you guys understand the different ways of owning and investing in real estate. I will never be able to do that because I don't have $2 billion. but I could oversee and give input into a $2 billion, you know, as a research person into the, at the corporate level, into the management, acquisition, and the reinvestment in the individual assets. Yes.
So for the questions about the publicly traded companies.
Yeah, just go find it in a 10K or an annual report.
Well, I know someone that owns one of the private ones, can I?
I want you to do the public,
Okay,
because I want you to get used to audited financial statements under GAAP. And then just get more comfortable with the line items. The private equity side's a little bit different. But if you wanna do both, and show the difference, that's even smarter,
okay.
right? Cause now you see the difference between the two.
Mm.
Cause you might be working in private equity someday, and you might be working in public equity too. So it just gives you more bullets in your revolvers when you're talking to people trying to get ahead,
Okay.
okay? And then, the other is the financial ratios. The financial ratios. What's the most important financial ratio on this list? If you were to pick one financial ratio to track, because you're investing in real estate investment trusts, what's the number one variable that you would pick out of all of these? What's the most important? What?
That's it, second one.
Return on assets? Okay, what'd you say?
The same thing.
Okay, I got two. Okay, you guys are all gonna have to
Oh.
have opinions. Go, come on, you can do it.
No, wait. I'm going back and forth between two now.
Come on, you guys. You all took accounting.
Well, you
Oh,
wanna
what
know
about the
like
fourth
the
one?
return, but also the earnings too, cause they're the. I wanna know about your.
Yeah, the first one is ROE, return on equity, right? I'm an equity investor in the company, I wanna know if they can, you know, beat their benchmark, you know, their pro forma guidance on their ROE, right? Cause I wanna know that they can beat their peer group without taking too much leverage, right? Isn't there a correlation between leverage and return on equity? Yep, but if you over leverage the company, the cost of capital goes up and the ROE goes down. So they're kind of related to each other. Yeah, definitely the P, price to earnings multiples, or the funds from operations multiples. And I'll walk you through the valuations on how to do the valuations for REITs, you know, and how you do that. And we're gonna do a REIT later on in class. And I'll bring in some examples of some really good securities analysis that I've done in my other classes. And then you work in teams, and it's, you know, I try to give you the test question. When you walk into a company, are they gonna make you build everything that you're gonna use? Or do they have templates?
Templates.
You gotta have templates. And then when you start messing with the templates and saying, no, I think you should do it this way, but we've been doing it like this for the last 12 years,
Who cares?
huh? What are they gonna say?
Oh well, too bad.
Yeah, they're gonna say, do it our way. You know, because that's the way the auditors want it and our investors want it. And we're not gonna, the way you're doing it is okay, but they're not used to it. Okay, and I gotta look at 150 of these reports, right, every quarter. So if you start changing the format on me, then it's gonna mess me up, okay? All right. And then WAC and CAPM, did you guys take finance? What was your introduction to corporate finance, financial management, principles of finance? Did you guys take that? You're taking it now? Okay. Okay. So the capital asset pricing model is basically the regression model to forecast the return on equity. Okay. And then the weighted average cost of capital is the discount rate that you use to come up with the present values, and I'm gonna walk you through all of that economics, because it says economics in this class. This is the investment analysis. So I'm gonna do real estate financial economics, and we'll go through case studies, like Mission Bay. Anybody been to Mission Bay? Mission Bay, the biggest life science cluster, probably outside of Cambridge, Massachusetts, anchored by UCSF and Genentech and the pharmaceutical companies up in San Francisco, next to the ballpark and the Chase Center. Do I need to keep going? Okay.
Yeah.
And then anybody heard of Salesforce Tower?
Oh, yeah.
1 million square feet on the corner of Fremont and Second and Mission. Who's in Salesforce Tower? Who's in Salesforce Tower? Salesforce, okay. Who takes up almost the whole building across the street? Salesforce, and the other building across the street,
Is it Salesforce?
Salesforce. So they have almost 3 million square feet on basically one corner in San Francisco. So we'll do that too, okay? Then we start getting into this stuff. Okay? What is a real estate market? Well, if you're going global, the markets are countries. I could also drill into regions, Pacific Northwest, California, Desert Mountain West, that's a region. I can drill down into the state, could be a market. So we're looking at multiple states to invest in. State could be a market. And then northern Southern California could be a market. The San Francisco metro area could be a market. The city and county of San Francisco could be a market. Central Business District could be a market. And then basically you get down into trade areas and you get down into census blocks and census tracts. Okay? So I can drill it all the way down or out, depending on what the type of market research that I'm doing. Okay? And market research analysts are basically applied real estate economists. Okay? What is real estate market analysis? Okay, I kind of described it, but you're tracking the markets, the market metrics, you're tracking the economic indicators and the demographic indicators. So you're doing the market analysis. Okay? Do you think multi-billion-dollar real estate companies don't conduct market research and market analysis? They definitely do. They definitely do. Do you think they conduct applied real estate economics in-house? Absolutely. And then the other was housing policy. Do you think policy has an effect on the value of real estate? Land use policy, development zones, building codes, federal, state, local, housing policy, federal, state tax legislation, those all have impacts. So looking at policy implications on the value of your real estate is extremely important too. Real estate is multidisciplinary. It's a multi-institutional asset class. You use multitudes of disciplines when you're analyzing real estate. Economics, demographics, technology, policy, politics, law, psychographics, demographics, psychology, sociology. You're looking at all those factors when you're underwriting a piece of real estate or a portfolio. Okay? What factors would you look at if you were trying to forecast commercial and residential real estate? So supply. So permits, single-family permits, multifamily permits, commercial construction permits, buildings that are under construction or in the process. So basically planned, proposed, under construction, completed. Those are all different phases of the supply process. Okay, and there's different supply, they're similar, but there's some nuances. Like for residential and multifamily, we're talking about not only square feet, but we're talking about units built. Okay. On the commercial side, we're always talking square footage. Okay. So there's nuances between the property sectors. Okay, property sectors. And there's multitudes of property sectors, but there's 4 core property sectors: office, industrial, retail, and apartments. Those are commercial. Okay, although apartments are considered residential too, but they're considered investment, commercial real estate investment. So it's under commercial. Okay, because it's multi-unit, high density.
Is it 5 units or more?
Yeah. I mean. Once you get under 5 units, then you're really talking residential, townhomes, maybe condos, even though condos could be really big. But those are for sale as opposed to rental. Okay, so that's different. And then you have single-family homes, tract homes, or estates. Right? I love real estate. It's so interesting. And then on the commercial and residential side, there's demand factors. Obviously, we talked about population growth, employment, those things. household formations. You know, as you start to do the research, you know, start Googling and reading some of these articles, the research will tell you what variables drive these factors. Okay, so again, I'm training you to become a real estate economist or a real estate analyst or acquisitions associate or development associate or a developer or a chief investment officer or a chief operating officer or a chief executive officer or the president of the company. They all know this stuff, right? And then what drives rents for commercial and residential? What drives rents?
Location.
Yeah, but I'm looking for like net absorption, occupancy rates, jobs, population. You know, at first, what happens is the jobs start, people come in, people need a place to live, pushes up occupancy rates, pushes up rents, pushes up values. Okay? So it's causation, okay, not correlation. And then prices.
Have you
What
said that chain multiple times? Net absorption.
Yeah,
to
so
occupancy
employment
rates?
growth
Mhm.
drives population and household growth. As the population and the households form, they absorb more units, residential housing or apartment units. That drives up the occupancy rate. As demand increases in the occupancy rate, and I'll go through all this stuff, goes above 90% or 95%, the managers can start to push rents because there's no vacant units. So it pushes up the rents, and that pushes up the cash flows for the property, which pushes up the value. And I'll go through all of this stuff. But I would go ahead and start doing the research and start learning this stuff. And then that's another thing is some of my students get really mad at me because it's like, well, just tell us, just tell me. Why are you making me like go out and like find this stuff? Well, I'll teach you, the real estate economics and I'll teach you the real estate finance, but I'm going to teach you how to teach yourself, how to learn real estate investments and finance, because anybody who's in it, they're data junkies. They're research junkies. They love data. They love analysis. They totally understand this stuff. And they get into the numbers and they get into all of this stuff. That's why I became the economist, because I was talking to all the principals, right? All the company managers, all of the owners were talking to me because they want to know what's going on. They want to know what's going on in the labor markets, what the tech companies are doing, what's VC doing, are the Giants going to move, or are they going to stay? There's all kinds of stuff. And then the other is the calculations for occupancy rates, vacancy, net absorption, rent per square foot, price per square foot, cost per square foot, and cap rates. Okay, so those are all like the key metrics, and you can find those really easily. If not, just ask me. We'll go through this again. I'm just going over it now. Capital appreciation, changes in price, total returns, income returns, plus capital appreciation. If you haven't taken the finance class yet, don't worry about it. By the time you take the finance class, you will have already been through a lot of the stuff, and the finance class will be a lot easier. The other is you need to find research reports. Okay? And let's see if this thing moves forward. That's what I hate about this. So here, who's working in real estate right now? I got it. Who's working in real estate? What are you guys doing? Property management? Okay, got it.
Work for Marcus, an old job.
Oh, say hi to Hassan for me. Okay, so what are you managing? Apartment building?
Apartments in different state, commercial,
Okay.
duplex.
Okay. Where do you get your market research? If somebody said, "Oh, we're thinking about buying a property in Phoenix," what would have been the trends in new construction, net absorption, occupancy rates, rental rates, and valuations? What would you do?
Well, I work with a realtor, and I guess I do my own.
Okay, and who's the realtor?
Uh,
What's the company?
Compass.
Compass. Does Compass do their own research? Do they collect their own data? When you ask them what rents are in a building similar to yours in the area that you're either looking to or you're managing? Are you doing the market survey yourself and calling all the competing properties to get the rent survey?
No, but I
How do you know
a
how to set
lot
the
of
rents?
research.
What?
I do a lot of research.
Yeah, and where are you getting the research? Okay, where are you getting your research?
Well, I don't do the research and neither does the head property manager for my building. It's
Okay.
the asset manager and the
Yeah,
ownership.
where do they get it?
I don't know, we don't talk
I
about
mean, it's
that.
like a business plan of how you expect like the rents to increase over time.
Yeah, well, you can do your own market surveys and stuff like that, and usually you can look at market research reports produced by competing firms because you don't make enough money to basically fund a research department and have an in-house research department. Does Marcus Millichap have an in-house research department? Do they produce their own research? Is it a research-driven company?
I don't know.
Do you know who Hassan Naji is?
No, I work for Fabio.
Yeah, Hassan Naji is the president of Marcus Millichap.
Oh, really?
I worked for him.
Okay.
Yeah, he was the head, he ran the research department, he built the research departments on a national basis and ran them for years for Marcus Millichap and then became the president of the company.
So it was obviously valuable.
So here are the companies that produce the research. You need to go up onto these companies and go up to their research. Oh, there they are.
I don't wanna have people.
So here's one right here.
Go outside everyone's office and just bring it.
Can you see that? For some reason it's not coming. How am I doing on time?
You guys want an hour?
Yeah, perfect. So it's giving me a hard time. So here are the top research departments right here. Here are the top research departments right here. These are the top global full service real estate companies. The biggest, most prestigious, right? CB Richard Ellis, Cushman Wakefield, Jones Lang LaSalle are the top three. They compete fiercely amongst each other. And then you have Marcus and Millichap, which is global. You have Colliers International. You have NAI Commercial. Obviously, you have Compass and Coldwell Banker and Keller Williams. Those guys on the residential side. Okay. If my thing comes up, I'll show you.
Is there something that they researched that you might have looked at, like a certain, I don't know, aspect of the market that they researched that you saw and you were like wowed by?
That
I
they
would have
do?
never thought of that.
What they do?
Yeah.
The
Basically they're biggest in the world, but-
Robert Sammons, who is the research director for Cushman and Wakefield, along with Colin Yamaguchi, I think that's his name. Basically do extensive research on tech clusters, the composition of local economies within the real estate markets, really focused on tech and venture capital and stuff like that. Because there's just so much money coming in through VC that's really driving real estate valuations.
So they do.
And these guys are experts in basically technology sectors, the technology sector and technology employment impacts on commercial real estate.
So they have to know that whole market, and that whole style.
Yeah, not only do they know
And
the
then
real
they
estate,
have to
but they also know the tech side too.
turn into real. Oh
Yeah,
my
they know
God.
both. So they're experts in both. So what I gave you here is these are basically some crash notes. I wrote this introduction to commercial real estate for the residential agents down in Southern California, so I spent like 2 days writing this up as basically a primer. So you read this, you pretty much, you're in good shape, okay? And it's only like 6 pages or something like that.
Can't wait.
And then, is anybody interested in master's degrees in real estate development? MIT, NYU,
Construction.
USC, yeah, those are the top development programs. And then construction management,
ASU has a good one too.
Yeah, they do.
construction.
they do, yeah. They have a really good MRED program there too. So I'll go over this later, but I do list the brokerage houses. So that pre-test, the pre-test really sets a solid foundation. Really sets a solid foundation. Okay. So that's the pre-test. Okay. And then I already gave you the notes. I'll go over the notes a little bit later. There's a lot of career options in real estate. You could be a real property transactions attorney, land use attorney, contracts attorney, accountants. You guys will be employed the rest of your life. You go public equity, private equity. You know, there's mortgage financing opportunities that you can do. Obviously, investment brokerage, leasing. There's just so much that you can do. And if you want to get your chartered financial analyst designation, you can go into real estate, fixed income or equity securities analysis and portfolio management on Wall Street. If you go Wall Street and you get an MBA from an Ivy League, you can go work for the investment banks, underwriting and structuring, very sophisticated and complex transactions between companies, which would be kind of fun. They make you work really hard, but you make a lot of money. Okay. And I don't know about you, but I like to make money because life's just a little bit easier when you can take care of your family and stuff like that. I'm going to jump around a little bit. Obviously, that's not working for me. I'm going to keep trying.
Yeah, the next stop, yeah.
Okay, it's not working. What you're going to do too is you're going to do 5 memos. Okay. You ever written a memo?
No.
Do you think you're going to write a memo when you go to work?
What's a memo?
Yeah, I mean,
Come on. You guys don't do business. You don't do a business communications class here.
We do, but.
I did not do that.
No. God, that's amazing. Because one of my friends, Michael Yolanis, who worked for Townsend, this is like one of the most prestigious real estate consulting companies that advise plan sponsors, large pension funds, endowments. We had coffee like years ago, and she said your students can't write memos. I have to correct their memos. So they show me their memos that they're going to send out to my client, and I have to rewrite their whole memo. It's like you need to teach the students how to write memos.
That's right.
Okay. And that drives my students crazy too, because I make them rewrite the memos over and over again until they're perfect. If you're going to give a memo to a client, it doesn't have to be perfect,
Yeah.
because if it's not, what are they going to think?
You're a clown.
Yep.
Oh, this is a memo.
Yep.
Is this a memo?
Yep. So it's when you read those job descriptions, you ever read the job descriptions? I'm always looking for a new job. You read the job descriptions, does it ever say attention to detail?
Analytical detail.
Attention to detail. So the memos, these are the memos that my students and I have worked on over the years. This is for my finance class, but we're going to modify these for this class. Okay? And I'll walk you through how to write these memos. What I would do is scan the memo, scan it, bring it over into Word, like this, in this template. Is formatting important? Yeah, totally. Is anybody gonna read your memo if the formatting's all messed up?
Really dire.
No, heck no. They won't even look at it. So these memos, there's 5 of them. Stocks, oil, gold, bonds, US dollar. That's what we did in my finance class.
Memos are usually one-pagers?
Yep, 1 page.
Okay.
So there's a lot on this page right here. So what we're going to do is we're going to swap out the capital market asset classes. We're going to put the real estate space markets, real estate capital markets. So instead of we are tracking stock prices, it's going to be office prices, industrial, retail, apartments. based on our research, we forecast office prices to rise 7% over the next 6 months based on the following factors: rising wages, high business and consumer confidence, and the economy expected to continue to grow. Those are all basically factors that you would put in your regression model if you were gonna forecast office prices. Okay? And then here, this table right here, these are the derivative trades. Okay? Because here, we have office price indexes. And we have also office REIT exchange traded funds. And we also have REITs right here too. So if I can forecast where the prices of office prices are gonna go, do you think the office REIT share prices are gonna go up if I'm forecasting that the underlying real estate values are gonna go up? So if the underlying value of office buildings are gonna go up, do you think that office REITs that own office buildings, that their share prices are gonna go up? Yeah, and if I know that they're gonna go up, can't I buy those?
Definitely.
Yeah, I can buy the shares, I can buy them on margin, I can buy call options, I can write put options. I can make money on the derivative trades. So if I know the direction, of the prices, I can trade these derivatives and make money. Okay, got it. And then here, what you're gonna do is you're gonna go up to the CB Richard Ellis, JLL, blah, blah, blah. And what you're gonna do is you're gonna find data, bullet point data on vacancy, absorption, occupancy rates, rental growth, maybe, price trends, and you're gonna put these bullets right here. And then actually they're really nice within their research departments. They have the graphs of vacancy and rent trends and stuff, and you put them right there.
So we go to their offices to find these?
You're gonna use their research reports. So you download the PDFs. And then basically you're gonna copy over the graphs. You're gonna copy over some of the text and we're gonna edit it down. So you're not plagiarizing. And I'll walk you through all the stuff on how to produce, highly professional memos. Okay, everything's on one page. So usually the memo's on the front of the report, then you got the report underneath it, you got an abstract, and then you got the report. The board of directors and those guys are gonna read the memos and the abstract. And then if they're on a committee, they're gonna read the whole report. Okay, so that being able to write memos are extremely valuable. And these are some pretty good templates. So we'll do those. So again, application. Okay, I'm still having a problem with my, are you guys able to get the CB? Were you able to go up to CB? This is ruining my night. Okay. So I'm just gonna keep plowing through this stuff.
Do you want us to open it up on our books?
Yeah, would you?
Yeah, what's the URL?
CB. What I did was I just Googled CB Richard Ellis. Yeah, CB Richard Ellis.
CBREW.
Yeah,
This one?
yeah, and then there should be a research tab on there.
There's a search. Research or search?
There should be a research.
Research and
It's
reports.
research and
Yeah,
reports.
research reports, excellent. And you guys should be helping each other too, so you're not lost. And I'll try to work with the tech guys so that I can have a decent. So if you go to research and reports, what I would do is print out the national report or save down the national report. And then, are you guys interested in the San Francisco office market, Oakland, the Peninsula, San Jose? What are you interested in any markets?
San Francisco.
San Francisco. So you can pull down the San Francisco office report. And Cushman has one, and the JLL. JLL is harder to get to the research, but CB is really easy. Are you guys looking it up? Are you finding it? Yeah. Yeah, I normally just use
Go to
CB
research and
because they're so comprehensive and they're just easy.
Oh, you just.
CBRE.us.
Yeah, so those market research reports are going to be critical for you to produce your your memos. Okay. So what I would do is, go get the industrial report, download the national, Oakland and San Jose have the biggest industrial markets, so you want to use their research. San Francisco is a good office report that I would use, so get the national and then get San Francisco. For retail, you could use San Francisco for retail too. Okay. And then apartments, CBE has a pretty good apartment report, but Marcus Millichap does some of the best apartment research. Okay. Arnold Ting, he's the chief economist for Marcus Millichap. No, dude, oh, you
No.
with him, man.
Like what kind of report?
They do individual market reports. They should do one for San Francisco.
It just came up with all of these different.
Yeah, so, let's see.
For example, medical office trends.
Yeah, go, so you did research and reports?
Yeah.
Yeah.
And then I just typed in for San Francisco.
Oh, you
State.
did, okay, perfect.
And then that's
Just
what came up.
do San Francisco office,
Oh, office.
so you're just a little bit more specific.
Is that how I can do it?
No, these are office buildings.
Okay.
And then, but I would use San Jose or Oakland industrial, because that's where that's where the market is. And then you could use San Francisco retail if you want to. And then you could do any area in the Bay Area for apartments. So there it is, market overview, fourth quarter 2019, bam.
And this can be anywhere.
Yeah, if you wanna do other, what I would do is do like, for the memo, do kind of a macro trend for the US, but then you can drill into the markets for the bullets and the graphs. So you got, can you guys all look this way? Okay, so that's what the report looks like. And if you save it down in PDF, you can obviously take a picture of it, right? And when you pull it up in PDF, you can grab some of the text, bring it over and edit it down so that you're not plagiarizing. And then you just need to cite it somewhere. So go down. Oh, that's just a leasing activity report. So you want one that's a little bit more general, but that's because that doesn't get into prices or light of net absorption.
You want me to go back to it?
Yeah, see what it looks like down below. Yeah, and use graphs, don't use the tables. So these are good right here. So you see the lease rates
The net absorption.
and you have net absorption.
Yeah.
Yeah, so I would steal those and put those into my memo,
Okay.
okay? And then as you start to read these, you'll become more
This.
comfortable. Okay?
Oh, are you done marketing?
So these are the market research reports. It's gonna be for the memos, okay? Is everybody on board? Okay, I apologize for the screen. Okay, so the next, do you have a specific area of real estate you wanna research? Anything that you like? That
I
you're
don't know,
interested in?
I want to do real estate in San Diego, that's where I'm from originally,
Okay.
or Arizona, or Vegas.
Okay, any specific property sector that you're interested in?
I don't think it would matter, honestly.
Okay, what you could do is you could do some standard research on what drives commercial real estate values. There's a lot of research out there, particularly academic research from some of the top real estate research departments and professors across the United States. When I'm building my forecast models, first place I go is I talk to everybody in my company, I look at other people who've done the research, and I go to the academic research. And that helps me be able to build the model. So here is what you want. I would like you to do one of these for next week. Shouldn't take too long. Do you guys know how to do research? You guys ever use ProQuest or EBSCO or any of those? Peer-reviewed journal, academic journals? Do you have an area of real estate you're interested in?
Hawaii.
Hawaii? How about resort? The resort industry on a global basis. Go global and find out who what areas in the world are the most popular in regards to destinations and for investing in resorts. Hawaii's probably one, but there are probably others, right? I mean, you could even just focus on, Asia, because Hawaii is basically Asia, right? So what are the top 10 markets in Asia? And what's driving, resort and hotel occupancy rates and RevPARs and stuff like that on a global basis? So you could do some research in the peer-reviewed journal articles on how do you forecast RevPAR,
What is it?
growth rate, RevPAR, revenue per room. Because when you're doing hotels, you're doing revenue per room. In apartments, it's either rent per square foot or rent per unit.
That's the little nuance of.
Yeah, there's like different property sectors have different metrics that you would use to measure performance and to do the market analysis. Did everybody get one of these?
The resorts.
Oh, I think Gracie got
Very
it.
fine.
Did you get one? Okay. So these,
That's so funny.
did you guys ever do any research? Write a research report?
Nothing
Yeah.
like.
What have you been doing?
That's what
I'm
I
saying.
guess.
I was saying this.
No, this is, I teach my classes more like grad classes.
Real income statement.
Because undergraduate students and graduate students are just as smart. I mean, they're just as smart. Seriously. So why should I treat them different? Plus you think at MIT and Harvard and Wharton and Berkeley and Stanford, you think they treat their undergraduate students any different than their grad students? No way. You're gonna teach them the exact same content. The undergraduate students are just lucky that they were able to get in.
You're ready.
At the undergraduate level, they're basically getting their education.
You're ready. Yeah, okay.
I don't discriminate against undergraduate students.
Just put it on there.
Okay, so this
Fill it
is,
out.
so here's this one. And what you're gonna do in this course, you're gonna do this maybe 3 to 5 times, okay? You're gonna pick a subject, you wanna do resort economics, resort research. Your focus is gonna be on not only what drives revenue per room, what drives valuations, what drives values for resorts, okay? Not only what areas of the world are the best for investments in resorts, but if I was to buy in a resort, what are the factors that I would look at when I'm underwriting the acquisition or the development of a resort?
What is that? The underwriting, what did you say?
First thing I want to do as an investor is I can invest in office, industrial, retail, apartments, or hospitality and resorts. I want to have a certain portion of my portfolio in hospitality and resorts. I want to have a portion. How do I figure out where I'm going to invest? And then when I do decide where to invest, how do I decide to either build it or buy it? Buy it and reposition it, or build it? How do I underwrite the acquisition? How do I underwrite the development? Okay, and that's where the finance comes in, because you're gonna be doing present values, net present values, internal rates of return. You're doing all the market research, you're putting together the market research report, you're putting together a pro forma income statement, you're projecting out 10 years, and you're discounting back the cash flows to calculate the present value, net present value, and internal rate of
What
return.
do you mean underwrite?
It means that you're doing a research report. So it's like, we want to invest in resorts. Well, why? Okay, well, you better go do the research around resort investments in real estate. And then it's like, once you figure out, okay, yeah, we want to invest in resorts, where? Once you figure out where, what? And then, when we're looking at the property, or to build one, construction costs, land development fees, crime, population, airport, access to labor, inflation, all of these factors need to be taken into consideration in the underwriting process before we set down and invest $1 billion, in a resort, on Kauai. Because it's a lot of money. If I make a mistake, $1 billion is a lot of money.
So you'd like us to find an article about
Yeah,
that?
yeah, find a period, here's an example, okay, I'm into examples. So this was one of my top students, Kara, last semester. She was doing it on business ethics.
So this,
Um,
I don't,
Yeah, everybody gets one.
I got one, just a minute.
Okay, yeah. So what you do is you find an article in a subject. Ideally, it would be based on valuation.
Evaluation?
Valuation,
Valuation.
yeah, valuing something. How do you value, an apartment building? How do you invest in apartment buildings? What's the amount of flows of capital into commercial real estate on a global basis or in the US? Where does that capital go, and what property sectors do they go into, and what geographic locations do they go into? How do you decide where and what to buy? How do you know when to sell? So there's all these factors. So what I do is I put together an intake form that basically, what was the journal, who was the author, where did they publish out of, what's their contact info, what was the title of the article, what was the summary of the article, what was the data that they used, what was the statistical methodology that they applied, what were the variables that they came up with that helped, determine how to predict, and then what was the results of the research, and then the last most important thing, how would you commercialize that research to make money in real estate? Because doing research academically is great, you can get tenure, but in the business world, we don't care about tenure. We care about taking the research that was done to build better models, to do analysis, to make better business decisions, so we can make money on behalf of our clients and ourselves. We're fiduciaries, okay? So, did you get a copy? Everybody get a copy?
Yeah, I'm going.
Okay, cool.
I got some extras.
Okay, cool. I'll take the extra. Phew, I'm getting a little tired. I talked too much. Do you guys want chocolate or wheat crisps?
Coffee.
Yeah, we'll get out of here a little bit early. I bribed my students.
Thank you.
You're such a.
So what are we looking at for next?
Just do that one.
Just do this one?
Yeah, and then print out one of the market research reports
From the CBRE?
from CBRE. Yeah.
Okay.
And
So
I would
how
print
did
out,
you, one more time, how did you say it to not
Do-
plagiarize it?
what you'll do is you'll scrape, like they have bullets, like on vacancy trends. There's like maybe 3 sentences. So what I do is I copy that, bring it over, put it in a text box, and then I edit it down. I start taking out the thes and the us, and and I condense it down, or maybe rearrange it a little bit, so I'm not directly plagiarizing it. So if anybody ever checks it, you don't get busted. Because I've written these research reports before. It was funny because I taught a class one year, and the students decided to do BRE properties as their case study for the REIT valuation. And when they were doing the presentation, they were showing me the report. I said, where did you get this text? I mean, did you guys write all this stuff? I mean, this stuff is really good. Did you guys write this? It's like, no. It's like, no. It's like, I wrote that. You guys just copied and pasted from the website. So people know. All right. For the first deliverable, it's all laid out in the syllabus. What I do is I do deliverables once a month. Okay, and then we work on this stuff. I teach you, we work on it, I review it, and then we compile it all into these deliverables. And this was a microeconomics class. This is gonna be, but this was Aaron's deliverable. This was his first deliverable.
Who's Eric?
Aaron took my microeconomics class, so I could have given him, I think could have given like a multiple choice exam, or he could have handed in this. Now, do you think the multiple choice exam or this looks more like a product that you would submit to an employer? Got it. So you do 3 deliverables based on different instruments and different assessments. Writing, analysis, all the stuff that's good for you. I'll go through that in a second.
Sure.
Okay, the other one, this is the fun one. Okay, so you're gonna do 3 of these. Okay. one per, one per month, one per week. This is a movie review worksheet. What's this class? What are we taking?
Urban real estate.
Yeah, real estate. So any good real estate movies lately in the last? Yeah, maybe. You wanna do Inside Job. The Inside Job by Charles Ferguson. That's your first one you wanna do, it's a documentary. Award-winning
Netflix?
documentary. Oh,
Is it on Netflix?
you can get on Netflix. It's called Inside Job by Charles Ferguson. Basically, he walks you through the financial crisis. Was the financial crisis a real estate led crisis?
That was the director you said?
Charles Ferguson.
How do you remember names so well?
Well, I've taught this class so many times, but I try to memorize. If you can like reference people and names and stuff like that, people think it's
Solid.
Yeah.
Like when you name dropped the guy who worked at the research place? Like that, like.
Yeah, I knew his
place is
bosses.
the guy.
That was so cool. I was like, wow, he knows.
So what you're gonna do is the Inside Job first, and then do the Big Short. Okay, yeah, that's a good one.
The big shark.
The Big Short. Yeah, The Big Short. Who's in Scott Baio and Brad Pitt and a bunch of other. Yeah, that's a good one. And then you can pick the last one. The intake form doesn't really work for the questions here are what happened, who was involved, you know, and was there any policy that was basically introduced to prevent this from happening again? And the answer is there's Dodd-Frank, but this is going to happen again. It may not be in the real estate side, but we're going to go through a financial crisis again. So the Inside Job, The Big Short are two really important movies. If you want to watch a really great real estate movie, it's totally depressing. It's called Glengarry Glen Ross. Okay. Glengarry Glen Ross. You've heard of it? Yeah.
Coffees for closers, yeah.
Coffee is for closers. That's right. What's first prize?
The Cadillac
Yeah. What's second prize?
steak man.
What's third prize?
Yeah,
You're fired. Okay. So it's a great movie. You know, Al Pacino and so it was a long time ago. It's a hardcore movie, but it's a good one. Okay. Everybody quotes it. All right. How am I doing on time?
No.
45
minutes.
Okay.
Just kidding.
Okay. I'm starting to burn. So what we'll do.
I thought you were gonna be quiet, way quiet.
Yeah,
I'm
when we saw you.
trying.
When I was watching it, I was
Yeah,
like,
we were so confused.
Trying.
We saw you just
I'm
sitting
gonna tell
there.
my wife you said that.
you were just sitting for 6 minutes after
I
we
was
were
waiting
supposed
to
to
see if
start.
anybody else would show up late.
So I was la- I
Yeah,
was
we
like,
were, we were so confused. I was like, oh my god.
I'm like a chameleon.
yes.
Okay, so I'm not gonna give these out, but I have the, I did have the quiz. Oh, here it is. Here's the quiz. So what I'll do at some point is I'll go through the quiz. Okay? It's not as long as my finance class. A little bit shorter.
This is the take-home quiz?
It's gonna be I'll do it in class. You'll write notes on it, you'll study from the notes, and you'll come in and take it.
Okay.
And see how you do. If you do great, not everybody does great, but then you go back, you watch the video, you look at your notes, and you correct it.
Okay.
So, I'm not trying to
And is this quiz a part of our, first?
deliverable yet.
Yeah.
So I'm not testing you and then penalizing you on what you don't know. What I'm doing is I'm testing you on what you know, and then giving you the opportunity to go back and fill it back in so it becomes a take home.
Okay.
Because I think exams are, I don't know, I'm not a big fan of them. And if I give them exams, I want you to learn the content. Yeah, because people cram and stuff like that, and then you move on,
So,
and you learn material. It's like, well,
this was actually done.
I'd rather have you learn.
What the?
So we
Like,
printed
well,
out
is that good?
Article?
from
Do you know Alexis Walsh at
And then
CBRE?
print it out and like,
Is she in San Francisco?
Yeah, she like
and,
just
kind of-
scored the top earnings.
Just kind of like.
Really? No, I don't. Is she,
The article.
she
Yeah,
badass?
like what they found,
Yeah,
like, Google-
she's super
Would
cool.
you with that?
Yeah.
Research?
And what is she on the leasing side or
Which one?
This article.
Brokerage.
brokerage, investment sales?
Her dad is worked at CBRE too. Yeah,
That's all the best.
to feed in.
Totally.
You know, Greg Monthon?
Yes.
Yeah.
Where is, yeah, he's at, what, oh, did he move? Yeah, he moved. Wasn't he at Catmart or? Yeah, he's a good guy. He does a lot of research too. He's really smart.
He's like my
Oh, really?
Yeah.
Yeah, he's a real good guy.
That's why I'm doing all
He's
this.
come in and seen me speak a bunch of times. He's really
And
good.
then, I guess we should watch this movie.
That's awesome.
Yeah, he's a good, solid.
So you watch it together?
Okay, and then the midterms.
You talking
Okay.
movies though?
What I do on the midterms is I basically scale down the quiz and just go over problems.
Let's go talk.
And then what I'll do is, I'll go through my doctoral dissertation. Are you guys interested in taking a look at that? I'll do the doctoral dissertation, and so you can see what it looks like, and then the thought process that went around producing it. And then this, it's like a takeoff. But I'm not gonna do that now. I have 10 items. I'll do that out later. Anybody wanna take a look at the deliverables? These, yours aren't gonna be this thick, but just give you kind of an idea of what, you guys look at the cover pages, they're beautiful, right? Everything's clipped, everything's nice, you know, they handed in all their notes, you know, most of the exams are all, you know, written, and then you compile them, and you put a deliverable package. I've had students come to me and say, you know, Professor Souza, I don't have any work experience. I don't have anything to show a potential employer. I said, do you have the deliverable? I said, show them the deliverable. And he got the job at Tesla.
You just put it on a table.
What'd you say? And you'll have a job?
He got the job at Tesla.
Nice.
And then people have used the
Why are you getting
the memos. Huh?
They're getting thicker, I feel like.
No, some of the students didn't hand in the stuff. So they waited, right? So they,
thing.
huh?
Straight skits and I'm like.
No, well, no, Kira was, she handed in, we handed in everything. It's all over again. But she wanted to show that she deserved the game.
Done.
Oh my damn.
So she was
And some of the some students just hand in stuff to me, and it's like, no, you gotta go back and like package it.
Yeah.
You gotta go back and repackage the
Yeah,
work,
the car's going right.
as though you were giving it to a managing director or a senior level. This is just an example, but, you know, the cover pages are.
You do know her, by the way. What's it on LinkedIn?
Yeah?
Oh, this is just their work here also.
So did Sally.
Where
Do
did
you
she
know
go?
Jamie Garner?
Where did she go to, where did she do her? Oh, yeah, look, she did.
USC.
Oh, she.
University of
Oh,
Social.
man. USC is the best. It's the best. All right. So I think I'm burning out.
And at some point there is some overload.
Huh?
There's some overload sometimes.
I don't wanna burn you guys out, and I don't wanna lose any of you either. I
This
don't
is
wanna
like
lose you.
full work for this one.
Yeah, because some people rehanded in some of their stuff, because I asked them. Theirs is different because I had sophomores and some freshmen in there, I had no juniors and seniors. So it was the first time they were ever exposed to any kind of rigor. But I had like a half a dozen students that were just amazing. I mean, they just nailed it.
How do you find like the ones that were exposed to all the rigorousness?
Yeah.
How do you find they do like?
Oh, they
I
did
feel like
great.
this will be one of my first
No,
times,
they-
but I'm
they-
also willing to work.
No, they totally they transitioned into the work
Oh, yeah.
environment really
Yeah.
easy because they're used to working with a managing director like me and then getting critical feedback on their work, making sure that they're really focused on really good product. As opposed to just handing something in and getting a grade, or just handing something, that's kind of the mentality for students. But once you kind of go over, oh, I'll take a C, or I'll take a B, where you go, I'm not gonna give you anything until it looks really good, when you give me some feedback. So I can go back and correct it and have you take another look at it. That's kind of how we do it. I can't teach any other way I work.
I like
Do
it.
something that has.
It's different.
Yeah, yeah.
It's the first
Yeah.
time I think I've had a professor like
It's gonna tell me.
at this like it's a business school, so it's the first time I feel like I'm in the most business related environment.
Yeah, that's what I try to do.
Yeah, you make it work.
Yeah.
I try to make it as real as. And then, you know, and I'll work with you guys and stuff like that.
I'm excited.
The big one.
Excited to
Yeah, this is my favorite course. I really know
Well,
this.
Here you go.
What should we be getting done before that?
I would do this one, and then download the market research reports.
And it wasn't just San Francisco.
I would do national first, have one report as national, and then one local.
So we're gonna have 2 reports.
Well, you're
This
gonna
one
use
will
that to kind of forecast where you think overall office, you know, building prices are going. And then you're gonna drill into the San Francisco report and talk about net absorption, rents, put the
be
graphs
see
in.
differences.
It just goes down to like a little micro level. And I'll work with you guys on that too. Okay, and then, how much time do I have?
Yep.
30 minutes.
30 minutes, okay. Do you have any questions?
What's exactly due next week?
This,
Good journal.
Okay.
go find it. Do you guys have any subject areas that you're interested in?
Yeah.
Just real estate.
Yeah, yeah, well, you know, dig around, see if you, I'll coach you too.
Is it better to email you, or is that the best way to reach you? Email?
Texting me and calling me
Okay.
are the best. If you have any questions, I'll get right back to you. If you email me, I get so many emails. Email's really for my work, so I'm gonna have higher priority over my work.
Not
I'm sorry.
Makes sense. Yeah.
We're not making money.
No, but a lot of you go on and become extremely successful. Here's success is my success.
How many classes are you teaching here?
Just this one.
Yeah.
They brought me in to do the real estate, because they're revitalizing the real estate program. And Margaret, who's the head of the real estate program, she was like top in Virginia and DC and stuff like that. So she's a ringer. And then I saw her at a conference, and she told me what they were doing here, and she said, "Will you come teach for us?" I said, "Sure." Yeah, thanks. I appreciate it.
It's your first semester.
I taught micro last semester, which was totally different dynamic. Working with you all at your level, and then your interest in real estate will be so much better. And this, if we can keep the class this size, it'll be really cool. Be flexible, and I can customize some stuff.
That's so close.
Okay, any other questions? Anybody have any areas that they're interested in that you wanna maybe run by me?
I feel like they're all unknowns for me.
Yeah.
I'm
Absolutely.
ready to.
Do you wanna do something on like the fund accounting side or the security side or anything like that? Or you wanna do more space market or real estate market or?
I have no preference. So
Okay. Will you come up with something that I'll tell you if you can do it or not?
I have a question.
Yeah.
Could I do like the market for like retail buildings or retail like shops, like,
Yeah, what I would do is look at the overall retail market,
yeah,
like the CD report, and then look at the, you know, how retail is doing here, like in the Bay Area,
okay,
and then drill into how, if I was gonna buy a retail shopping center, what would be the factors that I would need to look at when I'm doing the underwriting to do the valuation? Because obviously I don't wanna pay more than it's worth,
exactly, yeah.
right? Or maybe if I own it, I wanna sell it. But how do you underwrite? How do you underwrite a retail property? And I can walk you through that too, but there will be some research
Like the
out there.
financial analysis on it and stuff.
Financial analysis, the market research,
Got
yeah, yeah. Okay, anybody else?
Yeah, I was gonna say,
Help?
Yeah.
Okay, and then, I do have some literature. Is anybody interested in literature? Journal of Property Management.
oh, yeah.
Okay, I got 2 of these. Okay, are you an IRM BOMA member? BOMA, IRM, BOMA, IRM. Anybody interested in real estate securities? REITs?
Let's do that.
REIT securities. Anybody interested in design?
Yeah, me.
Design.
We're the same ones.
It's just like, give me your stack.
Give me that.
Anybody interested in brokerage? Investment brokerage?
Yeah.
Okay, anybody, want to start pursuing their brokerage license, which I highly recommend,
Yeah.
like now. Okay. California Department of Real Estate, licensees,
Dan,
okay.
can you have a few years to be in a
Yeah,
real estate
you need to-
license?
Do you have your, hold on, I'm telling you how to do it.
Little baby.
Um,
Where are we at?
there's a guy, his name is Dwayne Gomer.
There's a guy.
Dwayne Gomer, I wanna write this down.
What?
Dwayne Gomer,
So much stuff in the
yeah, Dwayne Gomer.
We both spelled it different ways.
Dwayne Gomer.
Dwayne Gomer.
Easy Gomer. Okay.
Dwayne Gomer, you go up to his website, you call up Dwayne, you say, Professor Souza told me to call you. I wanted the 10% discount on the licensing test prep. And what you'll do is you'll go through his module, it's like 300 and something bucks. And you'll basically be completing the courses that you need, okay? And then he also gives you the test prep. Now, the state of California, because everybody was getting their licenses like that, slowed the whole process down. So there's a time limit for which you can complete these courses, okay? Once you got the courses, then you qualify for the exam. Once you qualify for the exam, you go, you submit, and you get yourself a test date. Now that takes a while to do that too, because the state of California backlogged up there. Once you get the test date, you go in, you pass the exam. Well, since there's a backlog, they're not gonna give you your license for X number of weeks. So before, it used to take us 30 days to do it, now it takes us at least 3 months to get your license. So get your licenses like now, okay? Because you can get a job anywhere once you have your license. It's like, oh, do you know anything about real estate? Yeah, I took all these courses, blah, 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 and I have a real estate agency license. Okay, property management, investments brokerage, leasing, mortgage finance. If you got your license, you're in. Other
Is
people who don't have their
module-
license, they're out.
His module will have
Yeah,
a big chunk of it?
yeah,
All of
no, everything. 360 bucks, and then it costs you 360 bucks to get the license. So for basically $700-800, you can have your license within 4 months. I highly recommend. Anybody interested in investment, commercial real estate investment? Commercial real estate investment? Hey, that's it. Anybody interested in development? 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 I already gave you development. You want to develop in San Diego?
No, I wanted to peek, straight in the way.
Oh, it is? That's CCIM. If you guys want access to the CCIM site, I'll give you my username and password. You can go up there. You can pull down anything you want.
What is it? It's a pretty
Big old guy. Big Del Mar guy.
Okay. What we're gonna do too is I have these, so this is what the peer review journal articles look like. I mean, now they're all electronics, right? But that's what they look like. I mean, I want these back, but you can take a look.
What are these you said?
This is the Journal of Real Estate Literature, this is the Journal of Real Estate Research. These are the peer review journals, where all of the academics publish.
What is it?
What's my head?
Just open up a
If there's any articles in there that you wanna write about, what you may wanna do, what you may wanna do is look at these. If there's an article in here that you wanna write on, take pictures of it and give it to me next week. That will save you some time. This is the Journal of Real Estate Research.
Straight economics guy
This is
right here.
the Journal of Real Estate
Yeah, bro.
Economics, Housing Research
Yeah,
is over
drawings.
there.
I had no idea what that was.
Journal of Real Estate Research is over there.
Thank
So
you.
these are the peer review journal articles. Okay. And all the top researchers, both in the private sector, all the top researchers, they all have like PhDs. and then the top researchers at the universities, this is where they all publish in these journals. So if you want, you can pick an article and then write it up for next week if you want to. And I'll bring him in again. Anybody interested in The Economist? Global perspective. Do you like that one?
Oh, yeah.
Yeah. You can take whatever one and then pass it around. The Economist is good because it gives you a global political perspective. Do you think politics has anything to do with the value of real estate?
Yes.
Yeah. What's the value of real estate in Mosul? Idlib. Mosul, Idlib. Syria. What do you think the value of real estate is in Idlib?
Prime for gentrification.
You think? No, it's gonna cost like 200 billion, maybe $1 trillion, maybe 3 trillion to rebuild those countries that were completely bombed off the face of the earth. What's the value of the real estate in Idlib? Yeah.
You say?
What's the value of the real estate in London? Complete opposite.
Yeah.
Singapore, Seoul. Yeah, complete opposite. So, political economy, politics. What do you think the value of real estate is in Venezuela? It's all hyperinflation,
It's going right.
Oh.
right? People can't live, so that, a lot of people are really, and then just look at homelessness in San Francisco. Look at homelessness in Oakland. You drive down Berkeley, you drive down the university now, in Berkeley, and you got shanty towns. That was never there 10, 20 years ago. It's a whole different economics now. And if you're interested in affordable housing, I've done a lot of that too. If you want to get into housing policy, housing economics, and the economics and politics around homelessness or affordable housing, I can do that too. So if you have special areas that you're interested in, I'll specialize some of the lectures around that. To get your real estate license, pretty pleased, sugar. I think that's all I can do. And I'll try to bring these websites up again.
What does he have in that?
And then write this one down too. Belden Club.
Belden Club?
Belden Club. Belden Club. It's basically a real estate